This is Thursday, a bit after 3 p.m. So this is not a trading video per se. There is no live trading going on. I just wanted to make a quick announcement. We started already a live room now. So we are combining the alerts with a live room where I demonstrate how to trade these alerts, how to use certain setups in conjunction with the alerts to let us know if we want to be on the long or short side of the market. Before we get there, just a quick glimpse at the two accounts that we are following. So again, the $50,000 account, the one on top, started with 60,100 March 1st. The $150,000 account started with 160,100. I always have $10,000 available in drawdown after the payout. I make sure that this amount stays in there. The alerts are posted between 6 and 9 p.m. Eastern, for the most part, really between 6 and 7 p.m. But I give myself a window just in case, between 6 and 9 p.m. Eastern. And so the $150,000 account trades the actual alerts, the actual buy and sell levels, targeting $100, trading one contract. Each alert only once, whatever I can catch. The $50,000 account, this one trades any qualified trade in a direction of the alert. So, for example, the buy in the NASDAQ was at 12,417, right over here. So again, this is not a line I just put up 10 minutes ago. This level, the members knew about since last night, a bit after 6 p.m. If any members are watching this, could you just confirm that I'm not just kind of going backwards after the fact and putting these numbers up? These numbers you get in the evening before the session starts. So the $50,000 account, because it takes any qualified trade in a direction of the alerts, obviously, very quickly, we were on longs only. And so there are just a lot more opportunities to trade in that way. But again, for new traders in our group, I recommend get your $100 and be done for the day. Follow the sequence of progress in a video that I posted in the member area. And if you follow that sequence, you're going to be doing very well within, say, 10 to 16 months. So the trading room, so far, I'm getting great feedback from the subscribers. It really, I guess, helps them in knowing what to do when you start up your computer, price is at some point, and what do you do with that? Are you looking for long? Are you looking for short? And what kind of a setup should you be looking for? This is the kind of stuff that we do in the room. And I've been kind of watching some other YouTube videos from supposedly futures academies or whatnot. It's interesting to me what they consider to be a proof. Now, and I'm not saying anyone is lying or any deception is going on, but to me it's a bit strange that some people consider a spreadsheet to be a proof. Now, I'm showing you a live rhythmic account. It's live because hopefully you can see this, but on the bottom there is a clock going. And you can compare this clock to my computer clock, and you're going to see it's the same exact time. You can see the total here and the total here. It's the same exact total. So I know anything could be manipulated. I get it. But to me, this has got to be better than a spreadsheet. Someone says they did something, but anyway, I don't want to. My point is, these alerts come beforehand. They come in the evening before the trading. And then, now that we have the live room, I'm showing the traders, and it's really nothing is complicated. I think maybe what traders really want to see more than the actual setup, because the setup is very easy. It's just maybe the discipline part of it, because what the traders are finding out when they watch me, I simply will not compromise. Either the market is going to do what I want it to do, or I am not trading. So today there was a situation. You know what? Let me pull up the S&P chart. Okay, so today in the morning it was a bit tricky. So when I opened up the room, the following happened. You see how the Nasdaq had a buy at 417, a sell at 283. The S&P had a buy at 39.37 and a sell at 39.12. Well, when we were about to open, as you can see, the S&P was at or below the trigger short, which meant the S&P was in a weaker position. At the same time, the Nasdaq was very close to or at the buy trigger. So we have one market that is in a weaker position and one market that is in a stronger position. Now, it's not unusual, obviously, that one index is stronger than another. That is absolutely fine. But they were actually flipped. In other words, there was a complete opposite story here. The story here is a story of weakness. The story here is a story of strength. And pretty much in the room, I stayed away. I did not take any trade the first 40 minutes of the day. It took me until 10 after 10 to place the first trade. And I placed the first trade after it became apparent that the S&P was going to start moving toward the buy trigger, or at least start moving away from the sell trigger, and the Nasdaq was at the buy trigger. So it took me a while to find the setup that I felt comfortable with. And that's, I guess, the most important message. You see, this is not going to be a trade calling room. I don't want that. I want the traders to understand what to look for and to eventually trade it completely on their own. All they need are the levels that they get every evening, and they're going to combine that with understanding what the market is doing. Now, as we were waiting for those first 40 minutes, there were actually two trades. Well, definitely one. The second one was a bit questionable. But there were two qualified trades that would have been winning trades, and I did not take them. Even though they were fairly high probability trades, I did not take them because I wasn't comfortable with the situation, with this kind of a flip. Now, later on, obviously, if you follow today, it was a huge rally up, right? Once the S&P broke through the top, now the two markets are in concert. They are behaving together, bullish. And now I'm just a lot more comfortable taking long trades. So sometimes you just got to be patient. If it takes half an hour or 2 hours, what I knew for a fact, even early in the morning, is that eventually either both are going to get weak, meaning the S&P is going to be below the trigger short, the Nasdaq will break the trigger short and be below the trigger short, or they both will go through the buy triggers. So they both went through the buy triggers. And sometimes you just, you need the patience. You just need the patience. So with this room, what I'm hoping to do, and it's going to be running 5 days a week. It's not a full day kind of deal. The point of this room on daily basis is just to show traders what the setup is and how to use it in conjunction with the alert levels. And I think really fairly soon, traders will understand what to do. They will not even need the room. But in the meantime, as we have new members signing up, I'm going to keep the room going. Now, since the room is definitely more effort on my part, prices will go up, not for existing members. Existing members are grandfathered in. Their fees will never go up. Sorry, guys, I had a phone call, and now, of course, I forgot what I was talking about. But let's go over a couple of more charts. All right, so oil was a sell at 67.74. And again, I spoke many times about the concept of the level, the trigger short in this case, pulling the price down. So you see that as price is getting closer, it tends to accelerate toward this trigger. And it does it a couple of times. So as traders learn how to take, in this case, it would be short trades, they will be able to take these short trades, not necessarily off the trigger, but even before, like here, 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 here. Eventually, price does break through the trigger, comes back, breaks again, comes back, breaks hard below the trigger. And you see this very often. So why does price come back? And I made a video on that also. Is because these levels not only pull the price down when price is coming toward them, these levels continue to have a force, for lack of a better word, like a gravitational field. And so when price breaks through, this force is still here. That's why price comes back. And again, and again, and leaves and comes back, and leaves and comes back. And it's, by the way, it's nothing to do with, I don't know, all this point of control or Fibonacci or, again, not saying anything bad against this. If you are familiar with that and it works for you, continue to use it. I'm just saying that this has nothing to do with that. So I imagine there are times when there was some confluence and it just happened to be that a level is also a point of control. Let's say if you're into market profile or whatnot, or some kind of a Fibonacci thing, but that's not it. So it's just the way of measuring a force in the market, and that's why this happens. And it's also why I tell traders to just take your 100, right? You don't know how much of a move there is going to be, but you are fairly certain at some point price will come back again to this level. So now this is toward the end of the day, but you see toward the end of the pit session, they try to come back to this short level again, and there were opportunities on the short side to take a trade. So gold was a buy at 1928. So this is a bit early in the morning, but if anyone is awake around 7 a.m. Eastern, there was a trigger long. Again, notice what happens to the price as it's getting closer to this trigger. There were opportunities to go long even before price hits the trigger. Once it starts moving toward it and it's close, you know it's going to touch it. I mean, that's like 8 out of 10 times. But then again, right, what we spoke about before, this area now continues to exert a pull, right? Only now instead of bringing the price up, it acts as bringing it down. But I never recommend, ever, to take a short toward a long trigger or a long toward the short trigger. I'm sorry, I never recommend to take a short toward the long trigger. You don't want to do that. The market is in a stronger position. You are looking for long trades. I'm just saying that this level continues to exert a force, if you will, on the price action. That's why you see this. Price breaks through and then comes back. Moves away and then comes back. Moves away and then comes back. All right, so that's all for today. Hope this helped you in any way. I'm sorry there was no actual live trading. I was just excited to announce the new trading room we have. So if you need to get in touch, my email is in the description. Have a great day, guys.